Good morning, good afternoon. Thank you for joining us this morning. We'll be starting momentarily. We're just letting a few people join. So we'll probably start in about 1 minute's time. Thank you. Great. Well, thank you for joining us today. We're very excited to have this event, have such a distinguished group of investors, entrepreneurs, obviously a very engaged audience. If you have questions throughout, please send them in the chat. We'll be monitoring the chat and we'll be passing those questions along to the panel moderator. First, let me introduce Aman Kennerly, Senior Advisor to Prosper Africa, who will be our master of ceremony today. Aman, over to you.
Thank you, Stephen. And thank you all for joining us today to hear more about what we at Prosper have been doing and also what's being done in the angel investor community and what's possible in this space, most importantly. At Prosper, we've been taking a holistic view on how to engage in terms of looking at a broad set of tools to engage, and then also engaging with a really broad set of stakeholders. We've engaged with several segments of the investor landscape, and it's great to have the angel investor community here with us today. I'd like to welcome Leslie Marbury, who leads the Prosper Africa initiative as its deputy coordinator. Leslie has had great vision on how we're looking to engage with investors and with companies to make good on our objective to increase two-way investment with African companies. Leslie?
Thanks, Aman, and good morning, everybody. It's very exciting to be with you all today. On behalf of the Prosper Africa Initiative, I'm really looking forward to a very practical conversation with investors and entrepreneurs. Prosper Africa is a U.S. government initiative to increase two-way trade and investment between the United States and African countries. We partner with businesses and investors to advance deals, promote market opportunities, and strengthen investment and business climates. Why do we do this? Because it creates jobs and shared prosperity. In the past 3 years, we have helped businesses close 800 trade and investment deals across 45 countries in Africa for a total estimated value of $50 billion. But we know that there's a lot more than we can do together, and that is why we are here today. The way Prosper Africa works, we work as a kind of one-stop shop that brings together the full suite of U.S. government services and resources from 17 different departments and agencies, so that we can better meet private sector needs and make us easier to navigate. We've established a team of Prosper Africa advisors who are dedicated to supporting businesses and investors looking for U.S. assistance. And businesses can reach us directly at prosperafrica.gov. But we're not just sitting back and waiting for people to come to us. We're also leading out on outreach like today with priority groups, including Diaspora, and youth as well. From my perspective, it's an exciting time to invest in entrepreneurs and innovators across Africa and its diaspora. I think we all know the statistics on African startups raising $350 million in 2016, and 2021 raised over $4 billion, and we know that that's going to be exceeded. We also really know the power of the global African diaspora, and as the US government are prioritizing this engagement. So thrilled to be here today to learn more from you all and think about different ways that we can partner. Thanks, Aman. Back to you, Aman.
Thanks, Stephen. Are you ready to introduce our speaker?
Sure, I'm happy to do so. It's with great pleasure I introduce to everybody to E. Aboyeji. E is the CEO and founding partner of Future Africa, one of the largest angel platforms on the continent. So E, over to you. Thank you.
Hello, can everybody hear me?
Yes.
Okay, sweet. Well, first of all, I want to thank the cross-boundary folks and the Prosper folks and the US government for the opportunity. Very, very grateful that we get to share a little bit about the angel investment landscape and what's going on as far as angel investments in Africa are concerned. I'm just going to spend the next couple minutes just talking through a few things. So first, I want to share our experience at the Fund for Africa's Future, which is more colloquially known as Future Africa, and how the group of amazing individuals we call the collective have actually grown to become not only the largest angel investor network on the continent, but also become a different model for investing that is more attuned with Africa's needs. I want to talk through some of the future needs that we have, and the role that angel investing and angel investors can play. And then I'm hoping that we can end on the notes of some thought experiments and approaches about how we're leveraging this community of investors to propel our own future. And I'll try and do all of that within 7 minutes. So I'll start with how we started. So Future Africa actually started as my personal family office in 2015. So quite quickly, as soon as I got some money from having been allowed by Jeremy to partially exit from Mandela, I think the next thing I tried to do, because I had no responsibilities, was share the money, as we'll say in Nigeria. So I angel invested in a bunch of my friends' firms, and we had run that kind of model for a long time, because obviously it wasn't a full-time job for me, up until 2017, when right about the time that Flutter Wave was growing exponentially. I started to see a need for me to play a more active role in supporting other founders. And in 2019, after I left Mandela, I decided to go into angel investing full time. After I left Flutter Wave, I decided to get into angel investing full time. At that time, the big idea with Future Africa was, we had just gone through a pretty interesting election and people weren't excited about what was going on. So what we had decided to do was that we were going to work with, within the constraints of the media that we had at the time, to essentially help share a broader, brighter vision of the future, so more people will be inspired to build. And when we started to do this, we then asked our readers, are you enjoying this? And they're like, this is all amazing, but we want to build too. And so if you can help us to build or invest in people who are building, that would be much more useful, better use of our time than just telling us all these stories about people building stuff and how they should build stuff. And that was how Future Africa as a platform evolved from just talking about people building stuff to then becoming a platform where we explicitly talked about companies that were going to transform the continent. And then we solicited people to essentially pitch into an SPV which we would then use to invest in the company wholesale. And our model, which we pioneered, has now become adopted by multiple angel groups across the continent, where essentially prior to when we started doing what we did, what a lot of people did was they would either try to force everybody to invest in the same deals, which never works, or they would go it alone. And we kind of built this model of opt-in investing where you would have a group of people, you would share deals with them and people could opt in different SPVs on an opt-in basis. That was incredibly successful and started the foundations of what Future Africa is today. Since then, we've deployed about $7 million of capital. We've got another $5 million, $3.5 million of our capital is what we call managed capital. So that's capital that people gave to us and said, we trust your judgment better than ours. Can you invest this capital on our behalf? So it's given us an opportunity to kind of go up the scales. And what's amazing is, as people have gone off the scales, the temptation is usually that you kind of abandon the angel investors that give you your first deal by deal money. But we found that actually that's a very dangerous thing to do, because the sustainable competitive advantage of our platform is the 400 collective investors who essentially are founders. They're investors in other GPs that are not focused on Africa. They are even investors focused on Africa, but are leveraging us for deal flow. They are professionals, they are regulators, they're government officials, they're all sorts of people. And the amazing, beautiful thing about working with this community is that people bring everything but their money to the table. I mean, they bring way more than their money to the table. Connections to new customers for startups. They bring introductions to other investors. Some of them even bring more capital to the table, or strategic relationships with the regulator and with government. And without this community, we wouldn't be able to return capital the way that we did. And that taught us a valuable lesson, which is why, as we've grown and evolved as a venture firm, we've actively decided that we will not abandon our collective community, but instead we would make it the centerpiece of what we do. So I like to joke that we're a venture firm, but with 400 partners instead of 4. And most of them look like us. The second big lesson that we've learned actually is how much capital there is on the continent and the role that diaspora actually tends to play, being more than just bringing capital to the table. So when we started, we thought all our money was going to come from the US. But the truth is there are a lot of structural barriers to our diaspora investing in African deals because of accreditation. Many of them are not accredited investors, so you have to break laws to be able to accept their money. And there are a lot of other challenges that are key to why we often can't do work with diaspora investors. But in the midst of that, we found local investors, African investors are actually quite a reliable bunch. About 30% of our membership base is African investors, and they actually are investing quite a bit. But they're always excited about the opportunity to connect with their peers from around the world. And what a lot of our diaspora investors have really brought to the table is that talent, expertise, the connections to large corporates globally, and the ability to actually, stand the companies globally. So it's really, really helped us quite a bit. So again, one of the myths is that all the money is going to come from abroad into Africa, but that's not what we're finding. We're finding the vast majority of our capital actually exists on the continent, and that we have to find ways to unlock it and fund diaspora to come back with their skills and their energy to come build the continent with us. The third thing I would say really kind of dives into the next one, and I think I need to end very quickly. So we put out a report just talking through what has been happening in venture capital and angel investing and what's next. And I think for me, I would summarize a lot of what is next and what is new in just 3 things that I think that diaspora have an extraordinary ability to impact without even putting money on the table necessarily. The first thing is actually talent. the biggest challenge every founder is facing is talent. We've got an amazing crop of young people on the continent, but many of them are still junior or developing. Many of them don't have the years of experience and skill that one would expect. And so oftentimes the best job that a diaspora investor or any kind of investor can do is just provide that active guidance to startups so that they don't make they make new mistakes. And that has been exciting. We've worked with a lot of diaspora to help startups from everything from product and engineering, mentorship, to marketing and storytelling, to fundraising, to business development and partnerships with very large companies. You know, all of that has been made possible because of our diaspora partnerships. And I think there's going to be room for us to be more organized about how those investments in human capital are made by diaspora. The second thing is infrastructure. And this is very surprising because when you think infrastructure, you're thinking, well, isn't that what the local government should do? Well, we all know on this call that the local governments have some capacity issues oftentimes. But the ability to actually be able to direct the infrastructure investment of large foreign governments like the US government or large multinational businesses is actually an underrated strength that the diaspora can have. And so when you think about, you know, where does the US put its, you know, billions of dollars with the DFC? Should they, you know, invest in another road project, or should they focus on supporting a cable landing station or data center? You know, we can help them make the right decisions that are good for the digital economy and for growing it. And diaspora, who have the practical experience of being part of two worlds, can actually help decision makers navigate. Same thing with, you know, when it comes to bringing in large corporates who really do act as infrastructure for a lot of small businesses and startups. There's a lot that can be done there. And then I think the final thing is governance, right? There is a lot that we need to understand about the way the world of business works around the world. And there's so much that's very early in terms of regulatory systems and so on here. And I like to tell anyone who listen that, you know, for all the cursing and displeasure about the fact that our companies are incorporated in the US, the reality is it's acted as a huge corporate governance check because you just can't violate Delaware law and walk away scot-free. So it's really been helpful to have that perspective from over the seas and from our diaspora. But naturally, there is a need for a lot of you know, the right expertise for people to understand what policy change needs to look like for us to achieve the right goals. And, you know, one big person I want to shout out, a diaspora person who's come from New York. His name is Osas Gobadia. And he, amongst many other government officials, many of whom are diaspora returnees, have actually championed the Nigerian startup bill, which is intended and designed to actually provide the right kind of governance environment for startups, both in terms of their ability to, you know, be corporate responsibility, but also have the ability to encourage innovation at the same time. And oftentimes it's very hard to do that without the expertise of people who've done it elsewhere before. So I think these are the big challenges for angel investment going into the future. And I guess without further ado, I'd like to hand it back to Imran, as I'm sure we're going to have as I'm sure we're going to have an amazing conversation about some of these issues. Thank you.
Thank you, E. I'd like to talk a little bit about our virtual deal room. And first, I should introduce myself as, again, Iman Kennerly. I serve as Prosper Africa Senior Advisor for Transactions. And in that role, I work with my colleagues and I to facilitate connections between companies that are seeking capital and the US government tools that can serve them. We also manage several different programs that support investors private investors, and companies. One such platform is the Prosper Africa Virtual Deal Room. It's an online matchmaking resource for companies that are looking to connect with different types of investors for the different stages that they are in their capital raises. We have over 60 transactions that are posted in the virtual deal room currently, and over 700 investors. There's a good variety of representation across sectors and geographies, with strong representation from fintech companies, logistics, retail, and healthcare companies. In addition to the matchmaking opportunity, or rather in furtherance of it, Prosper Africa has offered investors and companies technical assistance to better position themselves to attract capital in the case of companies, and to provide paid consultants to conduct due diligence for investors that want to invest in African companies. Over the past year, we concluded the first year of the virtual deal rooms pilot phase. So we are considering it fully launched now and looking to build on the initial success that we've had in the pilot phase. We've had 3 successful transactions out of that roughly book of 60 companies that were on the platform in the pilot phase, and we're again looking to really expand and open up to more success on behalf of companies and investors. So we're happy to have the opportunity today to highlight the virtual deal room because we believe it's a very relevant tool for angel investors. Right now, I'd like to introduce F.A. Barber. F.A. is the head of Nigeria advisory at Cross Boundary, and she's also an active angel investor herself. F.A. is going to moderate our panel of early stage capital providers and seekers. Welcome, F.A.
Thank you so much, Iman, and good morning or afternoon, everyone, wherever you're dialing in from. I'm super excited to be here today, just talking about the role of diaspora and angels in early stage investing. We already heard Leslie speak about the amount of capital that's been coming into the continent, but I think even with that, we still see that founders have a need for those early stage checks, the networks, the other forms of support that can come through angel networks. And I think there is a huge opportunity for the diaspora to help plug that gap and contribute to positive economic growth on the continent. So this is why I'm really excited to be talking to a few angels and entrepreneurs to get a practical guide on how they've been investing and raising capital and their lessons learned along the way. So I'll kick off with a quick intro of our 5 panelists today. But after that, I'll let them go into a lot more detail on their background and how they have started off in this space right after this. So our first panelist today is Deli Butler. Deli is an angel investor and the general counsel of the investment team at Walton Enterprises. We also have Grace Lagodi with us. Grace is also an angel investor and a venture partner at a South African venture capital fund, Grindstone Ventures. Also on the call today, we have Jeremiah Kuraya. Jeremiah is the co-founder of Ubuntu Life, which is a socially conscious lifestyle brand based in Kenya that offers handcrafted products across several categories. Also on the call have Adil Mamuji. Adil is the founder of Mushi Ventures, which is a global seed stage technology fund that focuses on Africa. And finally with us today, we have Luther Lawoin. Luther is the founder and CEO of Price Pally. Price Pally is a social e-commerce platform that enables consumer bulk buy foods and FMCG produce directly from farmers and wholesalers. So it's a real pleasure to have you guys here today. And thank you all for making the time to share some of your perspectives with us. I think I'll kick off with intros. I think first of all, I would really like to get a sense of, start with your journey into angel investing or entrepreneurship so that we can all understand, how you got here. I'll go around very quickly across the 5 panelists, but in 90 seconds or less, can you just tell us about your background and how you became an angel or an entrepreneur? Perhaps we can start with Adil, and then Dele, Grace, Jeremiah, and Luther.
Hey everyone, my name is Adil, and I was born and raised in Mombasa in Kenya, where my family still live. And I've spent most of my career as a product manager and operator. So really kind of working at technology companies and helping build products. But I've always also wanted to apply entrepreneurship and technology to power economic development in Africa. I believe that venture capital and early stage investing is one of the most capital efficient paths to growth. And so always wanted to spend my time there. In addition, I've always wanted to spend my kind of career in service of entrepreneurs and creators, and do that really in 2 ways. One is kind of building tools and software. So I worked on WordPress for many years, which is a free open source tool to help people create websites and online presence. And I also now work at OpenSea, where it builds kind of infrastructure for NFTs to allow kind of NFTs to power global trade. And then I've been investing at the earliest possible stages. And so my journey into an angel investor is, I used to work at Index Ventures, which is a VC fund in London. And I started seed investing in San Francisco, where I was, just to learn from Silicon Valley and how they did things there in 2010. And in 2014, I started angel investing in Africa, which is really, really small amounts of money in people I sort of already knew, and then expanded it from there and continue to kind of invest in about 10 to 15 companies every single year at the earliest possible stages all across Africa. And it's been one of the most kind of meaningful personal things I've ever done. Cool, next person.
Yeah, hi. So I guess I got interested in angel investing by watching a lot of my clients who are institutional investors and high net worth families do it successfully. And they were not necessarily investing on the continent, but I was a part of the Africa practice at Hogan Lovells, the law firm I worked at for more than 8 years before working at the Walton family office. And during working my time there at Hogan, I was helping to form Africa-based funds and traveling to South Africa, meeting the entrepreneurs. And then I guess I caught the fire, the fever. I realized this right here is going to be impactful and wealth building at the same time. And then I got excited about it and started networking a whole lot with entrepreneurs on the continent and investors in the US that are interested in investing in Africa. And then I actually started a good relationship with a smaller size US-based venture fund that invests exclusively in Africa or with African entrepreneurs that are in the diaspora, and hopped in on some of their co-investment vehicles, investing in directly into companies. And I'm so excited and enthused about the future of angel investing that I'm planning on spending my summers going forward on the continent, and really just meeting entrepreneurs, meeting founders, like some of the folks on this panel. And because I'm finding a lot of family offices that have not yet dipped their toe in investing in Africa are quite interested, and they really kind of need a guide and information. And so I'm excited about kind of helping to fill that gap as well.
Thanks, Julia. I'll go next. Is that right, Effie?
Yes, please, Grace.
Awesome. So hello, everybody. So name is Grace Lekodi. I'm born and raised South African. I was in investment banking for 10 years as I got into my journey of becoming an angel investor. And 5 years of those was spent at Goldman Sachs in the Johannesburg and the New York office. And so it was while I was in the New York office from sort of 2017 to 2019, started taking my bonuses and investing them in startups back home. And that's really where my journey into angel investing sort of came about. And then also just seeing how, New York, there's capital on tap there. So I always just remembered thinking to myself, if even just 100th of that capital can, go into South Africa and the, African continent, just what a difference that would make in terms of just how much greenfield and problems that need to be solved whilst building wealth back home. And then also, then I was part of the founding team of Launch with GS. And that is what is today an investment vehicle of Goldman Sachs, where they're looking to invest in women founders as well as investment managers. And so that's where my passion came in terms of building and growing from angel investing into sort of being a venture capital investor as well, to invest in diverse startups that can really have meaningful impact on the continent and scale globally. So yeah, that's me.
Awesome. Thanks so much, Grace, and would love to come back to that. Jeremiah, could you just give us a brief background and how you stumbled upon entrepreneurship?
Yeah, Jeremiah Kuria is my name, born and raised in Kenya, and not an angel investor yet. Hopefully I can become one. And entrepreneurship found me. I have my co-founder on this call with me. And for the longest, I kept saying I'm not a businessman, because when we found each other, I was a pastor and taking care of orphans, 140 children in an orphanage. And and when we started this, we were approached by a community of persons with disabilities, and we started taking care of them. And then their mothers challenged us, and they said they wanted to do something. And that is when Zain and myself asked them what they wanted to do, and they said they wanted to learn how to do sewing. And we started training them how to do sewing. And we always say our business was started by mothers to children with special needs. And we have enjoyed the growth of our business here in Kenya, now supporting a lot of women and some men. The growth has just been amazing. And now I call myself an entrepreneur, having been introduced by the least in the community. And I'm proud to be able to share here, and I'm ready to share some more of what is happening with Ubuntu here in Kenya.
Thanks, Jeremiah. Amazing. And Luther, could you also just give us a background on yourself and your journey?
Yeah, thanks for having me. Born and raised in Nigeria, been an entrepreneur all my life. Pricepally happens to be my fourth startup. I've mostly spent the time in e-commerce and edtech, managed an exit in edtech, and Pricepally is a very dear project to me and the team, because we're solving a very critical problem. It's even more severe now, so it's more challenging, and it seems like a life mission journey for me. And I, hope to be able to share as much as I can here, and probably network to other people here as well. Thanks for having me.
Awesome. Thank you so much, Luther. And it's been really amazing hearing all of your sort of respective journeys and how you ventured into angel investing or entrepreneurship. I'd like to dive a bit more into that, Deli. Maybe to start with, very practically, if I'm a member of the Diaspora and would like to begin angel investing, how do I begin? How would I invest through your company, or can I invest as little as $10,000? Can you just give us practical tips for starting off?
Yeah, and I could kind of talk about how I did it. I let everyone who would listen to me know that I'm interested in investing in African businesses and entrepreneurs. And through maybe you kind of leapfrog across 3, 4, 5 people, and then you end up getting connected to someone who is an investor, and that's what they do. And then you find out about opportunities and get a chance to screen them and choose the ones that you want. And so I have to say, just letting folks know and using your LinkedIn and your colleagues who have potential relationships. And then in terms of amounts, I find that if you're co-investing alongside, a small, $15 million or so venture fund, it's going to be hard to go in that instance below 10 to 25,000, depending on the relationship you have with the founder of the fund. And then unfortunately, I'm finding that sometimes these funds, as they get more sophisticated, they register as registered investment advisors in the US, and then they only can accept qualified clients, which means you have to have a couple $1 million worth of investments. And so some folks get further out from opportunities. But I'm actually listening to this panel, I'm learning about ways of getting in. So just networking and jumping on opportunities.
I can add a couple of thoughts to that too. So there are a couple of vehicles that are interesting. For example, like, E has Future Africa. You could invest through that. There's these things called special purpose vehicles, which oftentimes people raise for specific deals, and you can invest small amounts of money in those. There are angel syndicates now, which accept very small investments. So have a couple of friends running those, and even like my small syndicate accepts $2,500 per quarter. And so I think there are some like requirements around accredited investing and stuff. So it's still not as democratized as I think we all would like. And there's also this really cool tool from AngelList now called a roll-up vehicle, which allows founders to accept really, really small checks from friends. Because before, the hardest thing was the founders being able to administrate them. But if you know someone well and you want to invest in their company, there are now like way better tools that existed to allow this to become easier for founders to be able to accept small bits of capital. So if it was me, I would say, hey, like, make sure that 10,000 you don't need for the next 10 years, but if it goes well, that's amazing. But then try and find like those personal relationships with people you know, and see if they'll accept small amounts of money into the company, and learn by doing, and learn by like staying close to the company, like ask questions, like, learn about the business, be on the investor updates. Like that's the way I did it. And I think like optimizing for that learning per unit of time, like learning per dollar invested, and staying as close to the founders is really a great way to do it.
And can I just add on to that? I'm sorry.
Yes, please, go ahead.
Thanks. I'm not an investment professional. And so I was really nervous going in thinking, okay, well, is this a good investment? And so I leaned on some of my friends and who are investment professionals to kind of come in with me and help me understand and help me ask the right questions to the team that is making the investment. So that's another kind of barrier is, okay, well, how do I assess the opportunity? So I reach out to folks who know what they're doing.
No, that's a really good point. And that kind of takes me to where I was going next. And Grace, I was just going to come over to you. I know you've been investing on the continent for a while now. So just want to get your perspectives on, practically, how are you sourcing your deals? How many do you see a year? How many do you invest in? And how do you identify, startups that scale?
Yeah, so honestly, it's been very organic. Pre-COVID, it was attending a lot of, demo days, summits, being asked to speak at conferences and workshops in terms of, using my M&A transferable skill sets to help people with their business model. And that's how I would organically sort of meet founders. So I'd say that was sort of the one way. Hard to sort of put a number to how many startups that I meet a year. I wish I should actually have a CRM where I do that. But really for me, it's been about relationships and developing relationships with the founders. Because I think also my biggest thesis about investing, especially at early stages, not only am I investing in the business idea, I'm actually more backing the jockey before the business, and that 9 times out of 10, a lot of the businesses as they scale naturally pivot. So it's making sure that you're with somebody, that you're backing somebody that that even if it doesn't work out, they will pivot and get to a winning solution. So because there's a huge trust when especially you're giving your personal money into a startup. So that's where I would say I normally go in terms of just really identifying the individual, how they think about solving for a problem that is pertinent on the continent.
Awesome. Thanks so much, Grace. And maybe I can just pivot quickly back to Adil. I know you mentioned, you have over, 50 investments across, 7 African countries. So you must have a lot of experience with some of the issues that you have probably faced when considering investing in African startups. So it'd be great to get your perspective of what some of them were and how you overcame them. For example, touching on any regulatory or any tax issues that, I would need to be conscious of if I'm just starting out.
Yeah, it's a great question. And honestly, like I'm terrible at all the regulatory and tax stuff, and I like don't understand it all myself either. But the things I like often do are I try and like there's two pieces of this. Is like one is like how do you make a decision on like whether you not invest in something, and then two, like how do you structure it, right? So on the investment decision side, like similar to what Grace was saying, for me, it's all around like founder and market. Like, do I believe this founder is excellent? And like, do I believe the market could support some sort of venture scale outcome if things go really well in a very long time period? Like, doesn't matter how long it really takes. But the other thing I often do in this age of Zoom investing, and kind of you all had to get good at this when COVID hit, but try and really build that network of people that you trust, other investors, entrepreneurs, people that you know in common with entrepreneurs, and really try and reference check. Say like, hey, like I'm looking at investing in this person's company. Like, can you tell me more about them? I noticed that you were connected to them on LinkedIn, or I noticed that you were potentially also a co-investor in the business already, or an existing investor. And oftentimes ask for those intros just to try and learn more about the founders. So that's one thing I do. And in terms of structure, the like most common legal structure I tend to see is companies having their legal entity in the US as a US C Corp, or like sometimes in Mauritius or the UK or Singapore and other places. But let's say like the US is the most common. And so there's a C Corp that owns like all the equity in the US. You invest in the US entity, and then they own the operating entity that is in the local country. So that's sort of the most common business kind of structure we see. And then, the US has like a much more sophisticated kind of legal structure and governance structure than oftentimes a lot of these countries do. And it's like better enforceable. So those are the two things I looked at.
Awesome. Thanks, Adil. And just reinforcing E's point around just having the legal and governance structures, super important. I think perhaps we can just pivot a little to the founders for a moment. Jeremiah, I was just going to come over to you. Thinking about your journey in entrepreneurship, as an entrepreneur just starting out and hoping to raise sort of this early stage pre-Series A funding, how would I begin? How do I find these investors? How do I start the engagement process? What was your experience? And, are there any platforms or groups that other founders can plug into?
Yeah, and I would allow my co-founder to also chip in this, because he has been in this journey with me. But mainly, I would say looking for these investors mainly has been relationships, and has been sharing of our journey, and looking for people with the same core values with us, and people who believe in what we are trying to do. And the fact that we were just even trying this out, and having realized that our business was born the other way around, because we started as a nonprofit, and then the nonprofit gave back to the business. So there was a lot to learn on our journey. And we had brought so many people to the mission and the vision that we had, especially in the world of children with special needs and their mothers, and all the challenges going through. And we realized that there are quite a few people who are interested in jumping into helping in this field. And we have been approaching different people. Has not been easy, but we have been approaching different people. And we find that there are people who are excited into joining the journey with us and supporting as much as they can. And Zain, on the other side, has been the one very closely helping me in this. And Zain, I would request that you join a little bit, and you can help a little bit on this one.
Yeah, can you all hear me? I'm in Kenya as well, but I'm a little bit further in the bush than where Jeremiah is, so my reception is not the best. But hi, everyone, I'm Zain Wellman. Jeremiah is my most successful relationship of my life. But I think that is the key. Jeremiah said it, as did some of the angel investors, betting on the jockey, relationships. Starting with what Jeremiah and I have been through together for 22 years and enduring that, and the people that we got around us. I think next to relationships, I would say experience. Unfortunately, all of our funding has come from the US up to this point. We've raised just over 3 million US dollars at this point, and 100% of that has come from the US. We're knocking on doors thanks to Cross Boundary and Prosper, but have yet to find that backing. But it, for me, it's relationships, exposure. So we've had a lot of those initial investors were donors because we were a nonprofit for 19 years, and then we pivoted the for-profit out of the nonprofit. And so a lot of those people were like, wow, this is amazing. You went from 9 women to 150 women. We got into one Whole Foods Market location, and we got into all 300 Whole Foods Markets locations doing grocery bags and bracelets. And so it's that relationships, that exposure, but then proving the model, right? Like people can love the jockeys, behind this thing. People can love the experience and the heartfelt, impact that's happening with our maker moms and maker men. But if you can't prove out the model, then who's going to invest? And so, getting into every Whole Foods Market, delivering at that level of scale. We've been partnered with Whole Foods now for over 5 years. And then going from there to American Eagle Outfitters, doing custom, I believe, at shoe on the continent. And so we've partnered with Disney, with Marvel. And then our e-commerce business grew by 1,000% through COVID. And so that then helped us get, some legitimate investor backing that didn't necessarily hasn't been to Kenya, but they see the relationship that Jeremiah and I've had. They see the growth that we've had year over year in wholesale. And then for e-commerce to take off the way that it did and has continued to do, then you start to I think momentum is so important. And so that's how we've really been able to ramp and build trust and build these relationships with investors. But if anyone has any advice on building relationships with investors on the continent, we would love it.
Awesome. Thanks so much, Zane and Jeremiah. And I love the focus on just building those relationships. I do want to kind of switch over to Luther for a minute. Luther, I know in your intro, we heard that you're a serial entrepreneur. I would love to get from you, what is the one trait or ability that's made you successful as an entrepreneur? And what are some of the traits that you look for, when engaging investors?
Okay. Yeah. So in terms of success, that's a combination of many things. But I think the core thing would be tenacity, like just staying in the game no matter what happens. That's like what counts at the end of the day. So in terms of the investors, the investors have been really been able to get closer with and form more than the bond of a business to an investor. I've been investors who are practical, been investors who show empathy, who are very interested in learning. First, they hear from you, then they get that information and process it and start to ask the right questions. When you have that kind of situation, it's usually very, I usually enjoy it. Even if you're not investing, those back and forths really, really help. And I've seen in the case of, our, business and the geography, investors who are willing to be on ground, for a visit or to just see what this thing is actually about, usually get more soaked in when they experience it. And that interest, is like the basics that gets them into all of those actions, like right from the beginning, being very interested, then, really working, with you to experience it. It's usually more, engaging than, every other type of investor who just would want the basics and want to write a check or even not write a check and all that. So I think that one trait would be the level of interest, the ones who want to learn and who give you good feedback. That's all I'll answer that.
Awesome. Thanks for that, Luther. And I know there have been a few questions coming in from the audience, so I'm just going to switch over to pose some of those questions to the panelists. So please feel free to send a few additional questions if there are panelists that you want to hear from. And if there are questions that we haven't covered, we will try and prioritize that to make sure you're hearing sort of from the panelists. The first question, I guess, to the investors is, what's the minimum return you're looking for, from an investment that you make on the continent? Kind of throwing this open to Adil and Dele and Grace.
Yeah, sure. I mean, I think on a per investment basis, like you're looking to invest in something that could be like at least 10 times your money, but maybe like, up to 50 or 100 times. Like if you look at traditional venture capital returns, especially when you're investing in the earliest stages, you got to believe that it could have a really outsized returns. Especially if you're investing with the kind of venture capital mindset. Of course, if you're investing in kind of more traditional businesses with a more kind of private equity mindset, those return profiles are different. But I tend to look for big markets and great teams and not like do any kind of modeling in the background at all. Especially when you're investing at the earliest stages, like it's almost wasted work in my opinion. Like just if you grab great folks, they know what they're doing with a big enough market, or like you have a view of the future that can be big. Like that's really what to focus on, not kind of like the spreadsheet side of things.
For me, my kind of special number is a minimum of seeing a way to 5x. And the goal, of course, is to have really outsized 50x opportunities that balance it all out. And also kind of more than, or I guess a combination factor is timing. Like how far do I think this company is away from the next series of fundraises, and an opportunity to kind of get the money a little faster than waiting maybe 10 years. Maybe there's an opportunity in 3 to 5. And then I feel like I'm a little less particular about it being way above 5x.
Yeah, I'll just add. So I think I'm in the sort of the same region as Adil, but I guess the only thing that I'll add is generally, especially when I don't invest in the sexy tech startups, investing in local community startups that and on the back of it can from one entrepreneur there can be 5, 10 entrepreneurs just in that community, and seeing just the change of people that can't find jobs, and on the back of just putting some money into like a bread company that is providing breads to the townships as an example. So for me, there's the return, but there's also the impact angle to see more people off the streets.
Thanks, Grace. And just another question from the audience is, it'd be great for you guys as investors to share a success story and a story of deals that haven't gone particularly well. Are there common themes and lessons that you can learn from these successes and failures? Maybe we can kick off with E.
Hello. Well, in terms of deals that have not gone so well, we've got a lot of them. And sometimes a deal goes well initially, and then it doesn't always go well forever. So, I would say, one of my earliest investments was in prop tech. It's still a space I'm extremely passionate about. And we had invested in a really great entrepreneur. I think he really tried his best. Who was extremely pedigreed, came from the best schools, was fantastic modeling skills, had big experience in the big global multinational in the space. But, the market conditions just didn't support the business, and he wasn't able to adapt quickly enough. And so, we lost $150,000 in that deal. So you can't lose everything. The company had to shut down, and that was that. And of course, in terms of deals going very, very well, there's multiple examples of them, and you hope that's the majority. But I mean, overall, our model is generally that we lose 80% of the money we invest, and 20% returns the fund and gives us our profit. So that's more or less our model.
I can add a couple of thoughts too. So like one thing that I suggest to anyone, regardless of the size that you're investing, like when I started investing with like really small amounts of money, I like wrote a memo for every single one. Like I was like an actual venture capitalist. Like I wrote a memo, I like did reference checks, I like wrote risks down. And it doesn't matter how much money you're doing, like diligence, like in your time of thinking, or like you applying like structure to the way you think about this. If you want to do this, it just, you'll learn more by doing it. So I invested in this like local marketplace business in East Africa. And I wrote down 4 risks. I was like, okay, like the team seems like super unfocused around the actual like business model. 2 is like the founders don't seem like entirely aligned on what they're going to do. 3 is the market might be smaller than we actually think. And then 4 is like they make a bunch of like execution errors along the way. And like the worst part about it is like that all 4 of those things materialized when the business shut down. And so it's good that I wrote these down as risks, but we call them out. But if I go back and read through like my investment rationale and why I made the investment, actually like on hindsight, the risks outweighed the kind of reward potential for that one. So that was a learning event for me.
Awesome. Thanks, Adel. And just any last thoughts from Dele or Grace? Fantastic. So thank you so much. I think we are at the end of the panel and we're pretty much at time. So I just want to thank our panelists for such an engaging and insightful discussion. There's been a lot of sort of talk around building local relationships and understanding the partnerships. And there are some links in the chat with specific angel platforms that you can plug into. I'll hand back over now to Iman to wrap up.
Thanks, Efe. I'd like to underscore the role of and concept of potential that we saw in today's discussion. I don't know that we explicitly mentioned that Ubuntu Life and Price Pally are companies that are connected to the virtual deal room. I did want to do that now, and just to underscore that they represent the set of high potential companies that are available on the virtual deal room and in the different geographies and sectors in various African markets. Today on our panel, these founders and investors demonstrate the potential for angel capital to intersect with these high quality and high potential companies. Our strategy within Prosper Africa for increasing investment is not just to rely solely on larger corporate or institutional investors. Angel investors are definitely going to be a key to unlocking this potential. And we see that there's not just one approach, whether we're talking about the one approach to investment return targets or the social return targets as well. Another takeaway is that the role for diaspora investors to continue playing in these efforts. Diaspora investors have contacts in the host countries, sometimes from their professional ties or their personal ties to the countries that have these opportunities. They also have connections with other investors outside of the continent who are looking for thought leadership and demonstration cases for investment. So we at Prosper Africa are definitely looking to support diaspora investors to take the lead in this space as we implement our diaspora investor initiative. We at Prosper have tools such as the ability to support investors, due diligence efforts and outlays, and we are developing additional tools to help. So please engage with us through the virtual deal room or contact us directly if you have questions about a more customized approach. I thank all of our guests for joining us today. I thank the Cross Boundary team, Stephen, Jamie, and the rest of your team, which has served as a great partner in Prosper Africa's work with the VDR and with investors. I also appreciate the insight provided by our keynote, Mr. E. Aboyeji, as well as our panel and its moderator. So Dele, Kamatso, Otto, and Luther, thank you so much and take care.